Welcome back to Market on Close. I'm Marley Caden here in our Chicago headquarters. Joining me now from the New York Stock Exchange to preview tomorrow's FOMC rate announcement is David Bush, Co-Chief Investment Officer of Trajan Wealth. David, thanks for being with us today. You know, as we take a look at this, I was just talking to my colleague about the meeting tomorrow. Virtually expected to leave rates unchanged. I was just looking at FedWatch tool. It's a 99.4% chance of a hold right now. So what's the single most important thing that's going to come out of this meeting tomorrow if it's not a change?
Well, Marley, first of all, thank you for having me on. And you're exactly right that tomorrow the expectation is that the Fed is not going to change rates. But what we're looking for is really the tone, both of the statement that they produce as well as the post-FOMC press conference. And we're going to be listening for a shift in their thinking because we've seen higher inflation and we know that unemployment is still relatively low. So the Fed has to battle inflation and headline inflation has been trending higher. So that's what we're looking for is, you know, what is the path forward? And also the dot plot will be an interesting chart to observe after tomorrow's meeting.
And the dot plot, Kevin Warsh has made it no secret that he is not a fan of the dot plot. As far as what you expect from him, I mean, he had a lot of commentary before he was actually in the role about things he likes that the Fed is doing, some things that he might want to change if he were to end up as the head of the Fed. Now that he has the job and now that he's been in it for a few weeks, do you expect there to be any meaningful announcements tomorrow as far as what his regime might look like? Or is tomorrow going to be more of a non-event and he's going to wait till later meetings to talk more about his communication strategy, the dot plot going forward, whether or not he's in support of an easing bias or a neutral stance, things like that?
Yeah, it'll be interesting to see what happens because you're exactly right. Kevin Warsh has not been he was not a fan of quantitative easing. And so there may be not tomorrow, but further down the road, more of insights in terms of how quickly they'll allow their balance sheet to run off through quantitative tightening. But to your point, I think that with Warsh, this is his first meeting. It's a major litmus test for him and his ability to build that consensus amongst his peers. And keep in mind that Jerome Powell is still on the Federal Reserve Board, so he'll still have a say, although he has previously noted that he's going to support Kevin Warsh. But Kevin has to build that consensus and he has to get everybody on board for the direction that he wants to take the FOMC.
And he's built his reputation as an inflation hawk, and that's sort of how we know him. But I've had several guests make comments to me now with this setup, with the memorandum of understanding and a potential resolution coming with this conflict in Iran, that creates a setup that may lend itself to a more dovish tone just for this particular meeting. So what's your viewpoint on that, how this announcement on the Monday before the meeting kicked off that we may actually finally have a resolution to this war leading into his first meeting, how did that change things?
Yeah, so really what's happened is the price of oil has come down. I mean, after today's close, the price per barrel is under $80 a barrel. So what that means is that energy-related inflation that has been permeating the economy, both from a headline CPI and PPI perspective, should start to normalize. And so automatically that will lead to lower inflation just because the price of energy is coming down. Having said that, we have to remember that the Fed targets a 2% inflation metric on core inflation, meaning they exclude food and energy. So core inflation has been a little bit more tame, but it is still, those higher energy prices are still permeating the economy. And what that means is that inflation is likely going to subside on its own.
Yeah, I mean, I'm just looking at May's CPI data. We looked at energy accounting for more than 60% of the increase that we saw there. So as we break that down and we look at oil prices, you highlighted below 80, we're about 76.60 and some change right now in terms of a barrel of U.S. crude. If they stay lower, I'm looking at FedWatch here. As I get out to September, we've started to deviate from no change to 70% no change, almost 30% hike here. So do you think if we keep prices lower, we're going to start to see that shift potentially away from a hike? What's your outlook for the Fed going forward through the year? Are you viewing a hike? Are you viewing a cut? Or are we just in wait and see mode indefinitely?
I think we're in a wait and see mode, and it really depends on if the ceasefire holds and if the price of oil continues to fall. But I don't expect the price of oil to fall to levels before the war in Iran. And really that's because of all the infrastructure that's been damaged. And so there's going to be a time period where that has to be rebuilt. And I know that there's pipelines being built so that they can bypass the Strait of Hormuz. But all that takes time. And so having said that, what'll happen is that the price of oil will continue to drop. It may not get back to those pre-war levels, but that'll help that inflationary pressure subside. And so I think that as time progresses and we start to see lower energy prices, lower cost of goods, then that'll put the Fed at ease that inflation is naturally retracing back to that 2% level that they're targeting.
And David, you said there, if the ceasefire holds, what is your level of confidence that the ceasefire becomes durable, and how much market risk is there remaining if negotiations hit another snag?
Yeah, so there's a ton of headline risk surrounding the war with Iran. Because if the MOU holds and we get the ceasefire and it gets signed and hostilities subside, then I think we'll see a relief rally in the equity markets and we'll see lower energy prices. But if for some reason, some unforeseen event occurs and the hostilities continue, we're going to be subjected to that headline risk. So what I've been telling my team is just to be mindful of that headline risk and don't make any knee-jerk reactions. Go back to the fundamentals.
Well, David, really appreciate you being with us to highlight the outlook for the FOMC meeting tomorrow and also what we might need to keep an eye on here as we deal with the potential end to this resolution with the conflict in Iran. David Bush, the co-chief investment officer over at Trajan Wealth.